So far, the U.S. markets have shrugged off all the trade war talk. But what about the Chinese markets? Stay tuned to the rest of the video to see how the Chinese markets have been negatively affected by the trade war talks and what this could mean for the U.S. markets for the rest of the year. The U.S. markets had a strong week last week, with the NASDAQ leading the way up just under 1%. The S&P 500 also up about 0.8%, and the NASDAQ still the leader this year, having a very strong year, up over 13% year to date. Foreign and emerging markets did not do so well last week, with foreign down about 1.5% and emerging markets down 1.66%. This negative week with foreign and emerging actually made both of them negative for the year, with foreign markets down about 1% and emerging markets down over 5% year to date. We're going to be looking at two different charts today, but the first chart in front of you is of the S&P 500. I mentioned in the intro that the U.S. markets have really just shrugged off all the trade war talks to this point. If you look at the chart, you can see right in the middle, which is March 1st, is a blue circle. That's when Trump first talked about putting tariffs on Chinese goods. This level that's circled in blue is a level on the S&P 500 of about 2660. Fast forward that to today, and the level at the end of last week on the S&P 500 was about 2840. That's about a 7% move to the upside for the S&P 500 since Trump started talking about the tariffs with China. So as I said at the beginning, the U.S. markets have pretty much shrugged off all of this trade war talk to this point. But what about the Chinese markets? This next chart is of the Dow Jones Chinese Index. The same with the S&P 500 chart that we just looked at. There's a blue circle right in the middle, and that's at the level of 345, which was at the beginning of March, whenever all these trade war talks started. Again, fast forward to where we are currently, and that level's at about 279 for the Chinese index, which is a move of about 19% to the downside over the last 5 months. So while we see in the headlines what seems week after week about President Trump and tariffs with China, it's obviously the Chinese markets which have been more affected by the tariffs so far. Moving on to the news, there were three major stories that happened last week. And while I'm talking about the trade wars, the first piece of news is that President Trump mentioned he's planning on raising the amount of tariffs on Chinese goods. He said he plans to raise these tariffs from 10% up to about 25%. Now, this isn't finalized and is still subject to change, but it also could go into effect as early as September of this year. And also, in case you're not familiar, some of the goods that he's planning on placing these tariffs on include fruits and vegetables, refrigerators, baseball gloves, and even rain jackets. Also in the news last week, the Federal Reserve said that they're keeping the federal funds rate unchanged, which was expected. This was confirmed by the U.S. economy adding 157,000 jobs and the jobless rate falling down to 3.9%. Which was showing continued strength in the economy. With that being said, the Federal Reserve said that they're still on pace for their quarterly rate hikes on short-term interest rates. The last piece of news is that the second quarter earnings season is winding down. 81% of the S&P 500 companies have reported, and 80% of these companies have met or exceeded their expectations. Also, corporate profits are up 24% from this same time last year, which is the second straight quarter over 20%. The biggest part of that is that sales growth for these companies is up 10%, which shows stronger economic signals, and it's not just companies cost-cutting their balance sheets. To wrap up today's video, earlier during the charts portion, I talked about how the S&P 500 continues to perform well, while the Chinese markets are down almost 20% since the beginning of March, which was when all this trade talk started. U.S. corporate profits haven't been affected by these tariffs yet, but we'll see after the third and fourth quarter exactly how these companies fare whenever China starts placing these tariffs on the United States. Thanks for tuning in today as we strive to give you everything you need to know about the markets in 5 minutes or less. Like our Facebook page and share our video, and we'll talk to you all next week.